Hello, it is the 8th of February 2011. Welcome to today's silver analysis on the silver log. And I'm going to start this off with a comparison from 1979 to what's going on right now. And what's going on now, what was going on then, was the market having a decent breakout. The breakout here in the current one was established on August the 24th when it broke out of the $18 level. We haven't seen the market at that price, well, obviously, since then. And it's been up about 70% now. And we've had this little shakeout in here, and the market seems as if it wants to proceed towards the upsides. But right now, it has outperformed what happened back in 79, but it's got a long, long ways to go, as this did culminate in a 700% increase from its 1979 breakout. There's a long ways for this market to really have that type of gain, but it wouldn't be that much of a surprise either when you look at the policies and what's going on within the silver and the fiat currency market, and a lot of the manipulation, of course. But moving on to the price action, what's been going on, it's looking more and more as if this breakdown below 28 is that of a failed move, and the 28 mark was very, very big, which was resistance in here, support on a couple of occasions. The support was supposed to be held here, and I guess again even towards that level there. But the break below 28 has really been what has stopped it from having a nice correction through time more than anything, because the market was in a spectacular uptrend for almost a half a year, and it didn't correct sideways from 28 to 30. Instead, it had a small dip below it in here, which to me looks like the failed move. And from failed moves can oftentimes create fast moves. And I was thinking at least towards this resistance level about 30 and a half, which is very close to where the market's approached towards today, as it's gotten up to 30 and one third. The Fibonacci, the sequence of Fibonacci has a high here of 31.28 and a low of 26.30. And I was stating that the big Fibonacci for this selling to not be a failure was for the market to hold and stay below the levels of about 29 and a third. Well, that didn't happen. So this move here is now a failed move. We'll see if a fast move can bring this thing upwards to the 35, 36 level. And 36 just happens to be where the trend line that I was focusing on through at the end of 2010 would come into play somewhere, a trend line, something like that. It's still calculating new levels every day on my spreadsheet, but we haven't seen it in quite some time because of the downward movements towards the markets. If there's any big move, I wouldn't be surprised if that's a level that would become an area towards resistance. But the first or the next big level is this 3140, which it started a long, long, long time ago when the market was in its single priced days, $4 an ounce, $8 an ounce. Those are the two prime levels that I started with, and then if the first Fibonacci level worked out to be like 10 and a change, then it was 14 and change. And then the next one after that worked out to be 21, and then this one at 32, or really 3140. And it did have some nice resistance towards that level. And if this is it for the selling, it's really not that much. Some people panicked, some people got washed out or scared out. If that's the case, then that happens, because very often within markets there's a lot of people that'll be shaken out, And if you were one of them, then there's not much more left that I can say. But within this 15-minute time frame, all of these key moving averages are heading towards the upside again. The 5-day moving average is sloping nicely towards the upside. The 10-day is now the 20-day, which flattened out, is now starting to go higher. The 50-day moving average really never did decline, but obviously now can continue proceeding towards the upside after it was correcting through time. And I think the big one is this volume weighted average price from the start of the year, because it started off on declining level right in here, and found resistance. Again, it found resistance, and it found resistance here, but the difference is instead of finding resistance and tanking, which happened here and here, it found resistance and then immediately found some support at 28, which was then able to take out this average, which means before the sellers were in control for the year, that is no longer the case. The buyers are now in control for the year. And this is the volume weighted average price since the market broke out in August. So a lot of bullish indications right now towards the market. This trend line that I drew up, which was really by accident that it happened to hit these levels, I was actually expecting it to hit this top here, and that wasn't even close. But I looked at it and I'm thinking, I don't know how it worked out so well, but I'm just going to keep it as is. And it's gotten above it very, very nicely. So what I'd like to see for some sort of support is either come down to this level and or the 5-day moving average as a key level of support. It is a little overextended, but that doesn't mean it cannot go more towards the upside right now. But like I say, a lot of this selling now, it's a failed move. Just because it's a failed move doesn't mean it didn't happen. If you got shaken out down below here, then there's not much left to say on that. If you bought at that level, once again, it did actually happen. But what I mean by the failed move is that because the market is not headed towards a downside, or doesn't look like it's headed towards a downside, that can often mean that there can be some big fast moves from the failed move, and in this situation it would be towards the upside. The next key Fibonacci levels, that of $31.40 per ounce, and breaking above that, well, I'll figure that out later on. Anyway, take care. Bye bye.